Hello and good morning. You're watching Traders Next Door. I'm your host, Ed Katashabe from Forex Insights SA, and this is the Daily Scoop. Gold has proven itself to be the powerhouse of 2025, breaking all-time highs multiple times this year, reaching $2,956 per ounce. Right now, investors are flocking to gold as it is a safe haven, and we're going to discuss some of the factors as to why gold is looking so attractive. Now, earlier last year, we did predict that gold was probably going to see that $3,000 mark, and it is looking like we are on a fast track to that figure. Gold is often seen as a hedge. It is a hedge against inflationary pressures, it's a hedge against geopolitical uncertainty, and it's a hedge against economic disruptions. And right now, since Donald Trump has taken office in 2025, all three of those factors are becoming apparent. Right now, thanks to Trump's tariff policies and trade policies, which are gradually becoming underway, he's looking at implementing tariffs on Canada, Mexico, and China before releasing tariffs onto the greater world as a whole. So after that sort of turbulent action, gold is looking very attractive to investors. We also saw recently with the CPI report that inflation in the US is looking very sticky, and Jerome Powell does not look like he has full control towards that 2% target that the Fed has been after for the last couple months. Those two factors together is leading to a lot of economic disruptions and uncertainty against the dollar right now. And gold is looking like a very attractive hedge against all those factors. So right now, Goldman Sachs is predicting that gold is going to go as high as $3,100 per ounce. That's $3,100 per ounce. And it is looking like all these tariffs and inflationary pressures are going to help drive gold there. However, it's not going to be a straight shoot to that price. Right now, gold is looking very extended, and a corrective pullback to lower prices is predicted to come at some point. However, right now at all-time highs, it is very risky business trying to preempt that good short. Right now, strategists are saying that gold is probably going to maintain its strength in the short to medium term, and we are potentially going to see that 3,000 price point before that corrective pullback comes down. There are going to be economic signs. We still have to see what is going to happen with Trump's negotiations and dealings with Russia. There is still a lot of economic uncertainty, a lot of geopolitical uncertainty right now. The Fed right now is looking like they're in a wait and see approach. The market has priced in 2 more rate cuts for the year, but the Fed could pivot its whole trajectory and actually swap over to rate hikes. So right now, it is very uncertain what the market is going to do with the current conditions that we have. So we are in a little bit of a wait and see situation right now. However, it is looking like gold is going to be bullish in the long term. So when that move is going to happen, not very sure, but that 3,100 price point is looking like it is very certain. Gold is one of those things where it tends to do well despite most of the changes in the economic situation. Whether we maintain our current higher inflation in the US, whether inflation stagnates where it is looking like gold is going to be long-term bullish regardless of which way this goes. Right now, gold is seen as a very safe haven asset. Every time the market is unsure what's going to happen, gold is normally the bet it goes towards. So we're likely to see a lot of gold pressure still continuing in the market before that short comes into effect, and it is going to be a very exciting time for gold. So right now, whether you're a investor, a short-term day trader, right now, bullish on gold seems to be the safer bet. We are going to come up with a whole new set of economic data in the next 2 weeks. We're going to have a new CPI report that's going to come out, and we're going to see how the Fed has managed inflation over this short period of time versus the last CPI. Trump's tariff agreements are starting to go underway, imposing them on Mexico and Canada right now. China's ones imposed earlier and might be reformed. So we're going to see what's going to happen in the short to medium term right now. But in the long term, definitely gold is going to be mostly bullish. And right now is a great time in the market to take opportunity and take advantage of what is happening. So you can go ahead and get yourself a Vault Funder account, get a two-step account for 35% off using the code FISA, FISA. Make use of the opportunities that we have available right now. This is an ongoing situation. Trump could give the next details of what he's going to do with tariffs any day now. So right now, trading gold is going to be quite the profitable endeavor if you manage to do it correctly and catch the moves as they happen. We're going to stay feet on the ground with this one. We're going to be closely watching gold. That $3,000 mark is coming, and it is coming decently soon. So don't miss out on the opportunity to capitalize on it. I've been Ed Katashabe. This has been Forex Insights SA presenting Traders Next Door, and we will see you in the next one.